Oh, mic test, mic test. Can you guys hear me? Hi, sorry. Can you guys hear me now? Oh, so sorry. I think I was having some very bad technical issue. I pressed start. It showed start, but it did not work properly. My bad. Really, thank you guys for waiting. Okay, great, great. Okay, I actually was talking just now for the past 5 minutes. I was thinking why nobody could hear me. Okay, thank you, thank you. Apologize for that. So welcome to another IC Markets exclusive webinar. So today we'll be on the final part, the trade management parts 4 of 4. So we'll be going through the trailing stop loss techniques. So it's actually there's part 1, part 2, and part 3 is actually already uploaded on YouTube for you guys to watch. So disclaimer as usual, please bear with me. I got to read through this before I begin. So any information contained on this webinar should not be construed as advice and is presented as educational material only. So International Capital Markets, IC Markets, has not considered your objectives, financial situation and needs, and you should consider its appropriateness to your circumstances. So the contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. So any opinion shared by guests and speaker of the webinar, which is myself, does not necessarily reflect the opinions or view of IC Markets. So this information is not directed at residents in any country or jurisdiction where such distribution or use would be contrary to local law or regulation. All right. So introducing myself. So I got to clear this whole slide again. Okay, so my name is Chen Yongjing. I'm actually the trade analyst for Everest Fortune Group. So we are an award-winning research firm. So we actually got the Technical Analyst Award. We are actually the finalists for the Technical Analyst Award for the best Forex and equity research for 2019, 2020, and 2021. So right now we actually have a special collaboration with IC Markets where we are bringing you guys the good stuff. Okay, let me show you guys first. So part 1, part 2, part 3 is all over YouTube. I'll just show it to you guys. Hey, hi there, Jack Zola. Hey, nice to see you here. So we have part 1, part 2, part 3, part 4. So this is part 1. You can actually view it on the IC Markets YouTube channel. So I'll send the link to the chat for you guys to view. Okay. So please subscribe to the IC Markets YouTube channel. The previous part is right here at this link. So feel free to give the video a thumbs up. You know, if you guys are watching part 1, part 2, part 3, give it a thumbs up. Okay, let me continue. So you guys can actually screenshot this down if you want. So we're going through 4 different topics today. So it will be on the anatomy of a trade. When do you use a trailing stop loss? Different trailing stop loss techniques and examples of trailing stop losses. Okay, so I was trying to show you guys a demo, but it's not working. My MetaTrader isn't working. Okay, let us continue. So anatomy of a trade. I got to recap again. I know it's kind of mundane. Some of you guys have already watched part 1, part 2, part 3 already. I've been repeating the same stuff, but there are people who have not joined this webinar before or even watched the first 3 parts, so I got to repeat myself. So we have the entry. I'm sure everybody knows what's the entry already. What's the entry? You enter, buy or sell. It's just a recap. Buy, sell. Stop loss, you have to put it a must. You have to put a stop loss. Take profit target, you definitely got to set it to prevent greediness. To prevent greed, you have a defined target. So with a defined target, you actually have reasons why you think price can hit there, and you are not You are not just taking a buy or taking a sell and then closing whenever you want. So you'll be holding, thinking, should I close now? Should I close later? Have a defined target, prevent greediness. Break even. Setting break even is very, very important, especially when you are in a losing trade. So an example of a break even. Let's say you took a buy. Price went back down, hit your buy limit, continued moving upwards, but all of a sudden, you had a stop loss below SL. Price suddenly goes back down and hits your stop loss, wiping you out of the market. So how can you possibly prevent that from happening? So for me personally, since today we are using the trailing stop loss, I like to personally set my trade to break even the moment price goes up 10 pips. So the moment price goes up 10 pips, I actually like to set my trade to break even. So my stop loss was moved higher. Stop loss moved higher, so if price comes back down, it would not clear out my stop loss. It would be break even. So I got to account for the commissions also. So SL plus 1 pip above. SL plus 1 pip above to take in or to think about the commission that you are paying. If you set exactly at your entry and there is commission, your trade is still in a loss. Okay, next, partial profit. Taking partial profits is very, very important. So I'll just go through that. Let me clear the entire. Okay, partial profit, talking about that. Okay, let's say you have a predefined take profit target. You have a TP area, take profit area. So you took a buy, same thing, you took a buy somehow, buy. Price almost hits your take profit targets, and all of a sudden, what happens? Price actually reverses back down, but then you already set break even because up is up 10 pips. You set break even, your SL above, price hits your break even, and then continue moving down. So how can you prevent that from happening? Why is partial profit very, very important? Because having a final take profit target, no matter what, you wouldn't have closed your trade until price hits that area. So having a partial profit, take profit 1, take profit 2, take profit 3, it helps you to remove your mind off the market, help you move your mind off the markets. So you will not be thinking about the charts too much. So let's say I show an example on a chart. So maybe you can see it more clearly. Okay, I'll clear everything out. So let's say you are in a buy. Let's say you are taking a buy. You're buying euro dollar. Let's say you're buying euro dollar. So your final take profit is at this nice little overlap support area. So looking for price to head towards that overlap support. That's your final take profit. You took a buy somewhere below. We are talking about a hypothetical scenario. All of a sudden, what if price all of a sudden reverses back down towards your break even level? So let's say your break even was set slightly above stop loss / break even. All of a sudden you hit your break even, your mind would be affected. You'll start thinking, oh, I should have actually closed out my trade earlier on. I did not close out now. I did not make any money at all. So partial profit, you could actually close out, let's say right here, could take profit 1. Okay, partial profit, you close 80% of trade. So you could have closed out 80% of your trade right there. So your mind is already off the market. The remaining potentially running to your final take profit, could be, let me write it out, runners 20% remaining. So the remaining 20% will run to your final take profit. You can already set your trade to break even, or you can actually pull your break even higher. So this is what I would do, setting partial profits, closing 80% of my trade. Okay, so I'll actually screenshot this down. I'll send it to chat. Copy link to a chart image. Example of taking partial profits. Okay, next. Moving back to the recap. Okay, trailing stop. This is what we will be going through today. So what exactly is a trailing stop? Okay, let me check. Okay, trailing stop. Okay. Idea invalidation. I'll go through idea invalidation first because today mainly we will be talking about the trailing stop. So idea invalidation is very, very important. Why is it important? It differs from trader to trader. So every trader has a different idea invalidation method. So I'll show you guys a few examples. So maybe you have the Ichimoku cloud. Let's say you are taking a buy. Same scenario, taking a buy, took a buy, but price, all of a sudden, what happens to price? Price decides to come back down, crossing below the Ichimoku cloud. So this could be an example. You can say price crossed below Ichimoku cloud. So this is your idea invalidation. Idea invalidation. Because price crossed below the Ichimoku cloud. So at this point in time, you could actually close out your trade. Steps to do: close out your trade. You can either close out your trade to take partials 3, or you can set trade to break even. These are the steps I would do if I see an idea invalidation happening. Okay, why price cross below Ichimoku cloud? Because indicates potential shift to bearish market structure. Okay, so I'll screenshot this down. I'll send it to the chat. So this is example of idea invalidation using Ichimoku cloud. Okay, I'll show another example, maybe 2 more examples with using the RSI and the MACD indicator. Okay, so next we have the RSI, relative strength index. Okay, let me change the settings. Okay, so we have, normally we should have 70. Where's the settings? Okay, 70, 30. Okay, maybe in this scenario, same thing, you took some kind of buy entry somewhere here in the middle. Let me pull things out. Okay, so in this specific scenario, why did the idea invalidation happen? Because price actually crossed above into the RSI overbought area. So that could be your idea invalidation. So what happens when price crosses into the overbought area? Definitely you are looking for price to reverse right back down. So I'll circle this area out. Okay, so I'll screenshot this down, send it to chat. This is example idea invalidation using RSI. So the settings I'm using on the RSI, Simon, you're asking. So I'm using 70, 50, and 30. So if you want to be more uptight about your RSI settings, you can actually put it to 80 and the lower band to 20. So it's more defined. So did I send the idea already? Let me check. Okay. Example of idea invalidation using RSI. Next, I'll show the last one, another one. Because idea invalidation, I'm sure some of you guys actually missed this. So we have the moving average. Moving average is the most basic indicator. Moving average. Okay, you can say, okay, is this moving average? You can say that idea invalidation took a buy, same thing. The idea would be invalidated right there because price crossed below the moving average line. Okay. So I'll just screenshot this down, send it to chat. This will be the last one. Okay, example of idea invalidation using the moving average. Gerhard, you actually said the Ichimoku I did not send. I think I already sent. Let me check. Okay, I've sent it to the chat. Did I send? Wait, let me check. Oh, my bad, my bad. Okay, this is my bad. Let me send the image over. I didn't send the Ichimoku cloud. Okay, let me just do it again. So you took a buy. Okay. Either invalidation because price crossed below the Ichimoku cloud, indicating a possible shift to bearish market structure. Okay. I'll just screenshot this down, send it to the chat. Okay. Okay, this example of idea invalidation using Ichimoku cloud. Okay, thanks Gerhard for the error. Appreciate it. Okay, let's move back. So idea invalidation in place. Next, the topic that we'll be talking about today is the trailing stop. So the importance of stop loss, take profit, break even, I've read about it already. So it's risk management, accept the mistake, mitigate your loss, and removes uncertainty. So it helps you to prevent emotional trading, so you know when to close out your trade. So risk to reward, minimum try to aim for 1-to-1 at least, at a very, very least. Okay, moving on next. Okay, recap on take profit and stop loss. So you look at this diagram, it might not be the best, but major resistance area. Stop loss, you want to set it slightly, maybe 5 pips or so above the major resistance area. So price will not potentially wick up and then clearing out your stop loss before heading back down. Same thing at the bottom, major resistance area for support. Take profits about maybe 5 pips or so before, just in case price doesn't clear all the way down and continues moving bullish. It just bounces off. It could happen. Okay, next. Let me show an example on the chart. Okay, so let me find it. Find a nice example. Okay, trying to find an example that price actually went up and clear. So I'll head down towards the M15 chart. Okay, maybe in such a scenario, this could be a scenario that we can take notes of. Okay, maybe I'll just show you guys one example. What if, in a hypothetical scenario, you are looking for shorts all the way down, but price is the reason why. There's a major resistance area right there. You are taking a buy entry somewhere. So I'll change it to support. Support. This is a first support. You took a buy entry. Buy entry somewhere. You're trying to aim it for price to continue moving up. Likely, maybe the previous swing high as your take profit targets. But what happens next? Price actually wick down to clear you out, to clear out your stop loss. So in a way, you can say that it actually cleared out liquidity. Clearing out your stop loss. So what you can potentially do, since we have a support area, your stop loss can be maybe, so over here it's 471. You can set it slightly below, maybe at 400. Stop loss below, just to prevent price from wicking down and tapping into your stop loss, wiping you out of the markets. So I'll just screenshot this down, copy link the chart image. So this example of setting stop loss slightly below a major support area. Okay, so any questions so far that you guys did not understand, feel free to let me know. Don't understand, let me know. I'll try my best to answer you guys. If I'm going too slow, so let me know. Okay, next. Let me take a look. Okay, so next we are going to talk about the trailing stop loss. So trailing stop loss, what exactly is it? So it's an order type designed to lock in profits, limit losses as your trade continues moving in your favor. Lock in profits, limit losses. So an automatic trailing stop loss moves accordingly as price moves favorably. So you can also set a manual trailing stop loss. I like to do this the best. Personal favorite. So I can manage it because there are so many factors in the market that can cause price to move up and down a lot, depending on the factors, fundamental and everything else. So if you have an automatic trailing stop loss, why I do not like to set an automatic trailing stop loss? Personally, this is just my opinion. Because price, let's say that price was moving up, you took a buy. Moving up very, very nicely. All of a sudden, what happens? Price, you have your trailing stop loss. So every time the price moves higher, your stop loss moves higher, moves higher. So we have a news event. News events. So let's say we're trading something related to the dollar. So the DXY, let's say USD CAD. USD CAD, then we have a USD news that was very, very bullish. So before that, what happens? Price suddenly wick down, hits your automatic trailing stop loss. So you would have already taken profit. Your TP will have been cleared out. You have taken money already. Trade closed. All of a sudden, because it was bullish, price continued moving higher and higher. So that's the reason why I do not like to set automatic trailing stop losses, news events, fundamental news, even some kind of advanced technical analysis methods that you guys might be using might factor in. Because with an automatic trailing stop loss, you can set your stop loss to be maybe 10 pips below your current price, 5 pips below your current price. Is up to you to customize. So manual trailing stop loss. Why do I like to use this manually? I really, really like to manage my trade manually. It helps me to have the feel of the market. Feel of the market as in whenever I'm trading. I do not like it when things are automated. So if you notice that for me personally, I actually don't use any indicators because I really like to have the feel of the market, what's going on. I like to digest the data manually. So manual trailing stop loss, I show you an example. So let's say you took a buy. Again, let's say we took a buy somewhere upon the retest. Buy right there, took a buy. What could possibly happen? If you have a trailing stop loss, every time price moves higher, so I'll just put your trailing stop loss. I'll just write it out. Trailing stop loss, minus 10 pips below. Let's say minus 10 pips below current price. So every time price moves higher, the trailing stop loss will move. So you look at this in this specific scenario. So let's say this one move already very high up. Your trailing stop loss start to move 10 pips below, but your final take profit, let's say it was somewhere up above, somewhere at this, maybe this overlap resistance area. So you're thinking price could possibly hit to that area. So you're holding on, waiting for the price to continue moving up. But what happens next? Price always has to retrace some way or another. You cannot expect price to continue moving in a straight line all the way up. So when a retracement occurs, it actually immediately would have hit my trailing stop loss. Again, trailing stop loss does not move lower every time price decides to move lower. It's fixed. It can only go up. It can never go down. Can only go up, never goes back down. So that's the disadvantages of trailing stop loss. And what happened? Price continued pushing, and continued to move up. So that's the reason why I do not like to use a trailing stop loss. I like to manage it myself. So what would I do? Just now I already said this one was your take profit targets, potential take profit targets. What do I do? Manual stop loss, manual trailing stop loss. Okay. Manual trailing stop loss. So for me, what I like to do is if I see price forms some kind of support. So notice price keeps bouncing off this particular area. So I'm giving room for price to do its thing, for price to not immediately, close out my trade, let price move around some wiggle room. So I like to set my price, like to set my stop loss slightly below, the resistance area. Stop loss slightly below this area that price keeps bouncing off. Okay, maybe I set it to blue. Okay, stop loss slightly below. So I'll continue. Hold, so let price do its thing. Likely go down lower. All of a sudden it moves up. Every time price moves up and forms a new support area, I will move my trailing stop loss higher manually. That's the reason why I'm talking about setting manual trailing stop loss instead of automated. So in the event price actually comes back down and hit my manual trailing stop loss, so be it. Because if it manages to hit my manual trailing stop loss, like in this scenario, okay, let me clear this out. Like in this scenario, price would then close out my trade. It would probably rebound a bit and continue heading towards my buy entry, potentially towards my initial stop loss. So what would you guys use? Would you guys use a manual trailing stop loss or an automatic trailing stop loss? Let me know in the chat. Would like to see what you guys would use. For me, it's manual. You don't have to follow me. You can do automated if you want also. Let me know in the chat which one would you guys actually use. Okay, Sumit said that she would use the manual trailing stop loss. So Simon also said that he will use a manual trailing stop loss. Well, what are your reasons? Nice, nice. Matthew also said he always does manual. Darren also said manual usually. Well, I guess we have a verdict. Yes, definitely, Simon. You have control over the entire trade. You are the boss. You can do whatever you want to your trade. Automated means you have no more control. So Robert said 100% manual. Well, nice, nice. So Darren said that he has a auto break even. So I get what he meant. So he wants price to automatically set break even above. But for the manual trading stop loss where to close out, he likes to set it himself. That's a great trading strategy, Darren. So Michael Becker actually said, so it depends if you are watching the market live all day long or take a trade for a longer time while being away. Okay, so in what case would you use the automatic trailing stop loss? Don't mind sharing with us. There's no right or wrong, it's just hearing the opinions of you guys. So Benjamin actually said manual for control as long as I am in profit. Nice, nice. All right. So I see you guys really are addicted to trading, really like that control, that feel over the market. Okay, Darren O'Shea said that you need room for trade to move, maybe trailing if you are going to bid. Well, possible. That's also a good trading idea. That's a good trading strategy idea. Trailing stop loss when you go to bid. All right. Let me see what else we have in the PowerPoint slides. Okay, showing you guys right here. I think this is a few idea invalidation. Just now I showed you guys already, RSI, all this kind of stuff. Okay, let me see what's this first. Okay, let's say you took a sell entry. An example, you can screenshot this if you want. So we actually have a nice little overlap resistance area. Overlap resistance. So we took a sell. We had a sell entry once price actually breaks that area. So continue selling. So we have a trailing stop loss set in place. So let's say price goes back up. It would have triggered that trailing stop loss. That's always moving together with your trade. So you would have actually taken profit from up right there to here. There would be your take profit. That would be the amount of money that you would have taken out of the market. Okay. Any questions regarding this slide that you guys don't understand? If everything is good, let me continue. Okay, let me just check these slides. Okay, see if I missed out anything. Okay, let me check if I missed out anything, just in case. I really want you guys to have the best education. So let me find. Okay, forgot this very important point. So setting a trailing stop loss also, the limitations are you can potentially miss out. So even a manual, it applies to both automatic and manual trailing stop loss. Own set of challenges. You may miss out on potential gains if the market continues to rise or fall after you have closed out your trade. So the levels actually, as I mentioned, depend on market conditions, risk appetite, trading goals, fundamental news, technical analysis that you guys have. So right now, cons, potentially missing out. Missing out if trade continues to run in the right direction. Okay, someone actually asked the moving average, do I use 8 or 20? So let me see the settings. I'm actually using the default settings, the moving average. Okay, let me check. Where was the indicator? Moving average. So settings is actually default. I'm using 9. So let's see 20. So you are asking me whether 20. So 20 actually looks kind of fine. 8, it depends on your trading strategy. You can actually backtest it out. So 8 looks a bit too tight. Maybe 20 if you want it to be a trailing stop loss. So Desiree actually asked, do I believe there's a stop loss hunting by algorithm and brokers? Well, for algorithm, I actually believe there's algorithms that are searching for the cheaper prices. So you're looking for a cheap discounted area. So maybe I'll try to show an example. Okay, maybe here there's no example yet. So let's say from this high right there, no price went up. Along this high right there, we have an entire area. So algorithm, to me, I always think that price would like to continue pushing towards the 50% zone. So notice just right, we are looking at the discounted area. The algorithm actually pushes price up. So yeah, I definitely believe there is such an algorithm running to trade towards the discounted area, the premium area, finding the best possible take profit, best possible areas to buy or sell. So I'm very, very sure, especially if you guys actually coded an EA before, a trading EA, a trading robot, definitely you are looking for the best areas to buy, best areas to take profit. That's the reason why liquidity concepts comes in play. So I've actually looked a lot at Twitter. So I noticed recently a lot of programmers have actually built their own custom-made trading robot on Forex. On indexes. What they are using a lot of smart money concepts. So smart money concepts, you are looking at the discounts and premium zone. So just take it as the robots are always heading towards the discount and premium zones. They are always targeting this area. So the programmers actually programmed price to buy or sell up towards the premium area, buy or sell at the discounted area. So yeah, for sure there's algorithms running in the market, many trading robots day to day. Used by institutions or not, I do not know. Used by a hedge fund, I would not know about that too. So yeah. Next, let me check what are the other slides. Okay. Okay, let me pull out the questions. It's actually put to the side. Okay. So what happened next? After the trailing stop loss got triggered, price actually suddenly shot back up. What would happen? It would have potentially hit your entry. So another example, moving average, sell entry, stop loss above once price steps into your trailing stop loss. So trailing stop loss, just more and more examples. I'll find more examples on manual trailing stop loss. Sell entry, take profit. Okay, this one support resistance. Okay, never mind. Let me find better examples. Okay. So as I mentioned, idea invalidation. And just now I mentioned at the start. So the previous webinar was on idea invalidation. Do we have idea invalidation? I think I went through that. Okay. So any questions regarding idea invalidation, or you guys have your own trading strategy that you would like me to diagnose for an idea invalidation? So idea invalidation is very, very important when you are trading. So if you do not have an idea in validation with your trading strategy, it's actually very, very dangerous. You do not know when you are wrong. You do not know when to close out the trade. So yeah, it's very, very bad. So for example, my personal idea in validation, how I would see things, it's, let me move down the table. Okay, so I can sit down. So my personal example of idea in validation, it's when I see price actually goes back up, my buy entry moving up, moving up, moving up. Let me show example. Took a buy. I had my stop loss maybe somewhere below. So I try to draw something that is kind of realistic. So took a buy entry, price continues moving up. But what happens when price actually forms a new low? So it potentially could have already hit my stop loss. My take profit targets was somewhere up there. So how would I have my idea in validation? How would I know that? Because price actually formed a new lower low. So this was a higher high. I'll just type it out. Higher high. Okay, I'll change it smaller. Higher high. Higher low. That's how I see things. So we have a higher high right there. And a higher low, HL. So higher high, all of a sudden, what happened next? A lower low was formed and a lower high was formed. So at this point in time, I would have already figured out that the trade would likely not go into the right direction. So I'll write this area out. Idea invalidation due to markets forming a lower low and lower high. So this is smart money concepts. Idea smart money concepts. Market move forming a lower low plus high. So at this point in time, same thing, I would have the steps I would have taken. It's steps taken. Recap again, either close out my trade fully second, potentially close 80%, partials, plus set break even. Very, very important. Or you can just set break even. You are just risking the chance that price might potentially hit down and close out your trade. So stop loss set slightly above, set break even just in case price goes up. Same thing, taking partial profit. Okay, let me try to make a realistic chart. Let me try to draw it out. Okay. So I will try to combine everything together, everything we have learned together. So let's say we have over here an overlap resistance area. So overlap resistance, that's the reason why this was our take profit targets. But taking partials, partial profit, why? Because we have a dotted, I'll put support line, dotted. So this was an area that we were watching out for, another overlap resistance. So this could be your partial profit. So for me, I'll close 80%. I wouldn't write that partial profit area. So now this is the example of combining idea invalidation, break even, partial profits all together at once. Okay. So yeah, I'll just screenshot this down and send it to the chat for you guys to see. So this is a very, very good example that I believe can help you a lot. So please save that image down. So Promise actually asked a good question. Do I trade the news? I personally avoid currencies that have news events coming up. So for example, we have, let's say tonight, the Canadian news coming out, the GDP will be released, GDP will be released, the gross domestic product. So 1 hour, so 1 to 2 hours before the news is released, I will stop touching the USD CAD pair. 1 to 2 hours after the news release, I will let the market settle down, price in the news that is going on, and then I'll continue trading from there. So yeah, I do not trade the news when it's happening like 9:30 p.m. my time, Singapore time. If the news releases, I will not be entering any trades. So Michael Becker actually asked another question. Do I stick to the same time frame when I'm using higher high and higher low? Well, it could have been a higher high on the larger time frame. So if you go to H4 charts, likely this could be a, let me just mark it out. Okay, this is not big enough. Let me get a better one. Highlighter, okay. Okay, lower, low, higher high, low, higher high. Then price continues to move down. So we can say maybe here, then price starts to break. Maybe price is reversing, we never know. So on the higher time frame, we can say that likely the higher high just got broken on the H4. So what can happen now? I can move on towards the 1 hour charts. So on the 1 hour chart, things will be very, very different. It won't be the same. So to me, on the 1 hour chart, I'll be changing color. So let's say this was the, let me change the color first. So blue on 1 hour, so all of a sudden it formed a higher high, higher low, higher high, higher low, higher high. So it differs from time frame to time frame. So all of a sudden I move towards the 15-minute charts. Things are again very, very different. So I can move it again, change the color. Maybe I should put red. Lower high, lower low, lower high. So it moves like that, start to break. Everything is moving differently. So as you go time frame to time frame. Okay, let me check. Oh my God, I've sent the wrong chart. Okay. Let me just control Z everything. I'll send you guys the updated chart again. So as you move down, I'm trying to show you, Michael, that the moment you are moving down smaller and smaller time frame, the higher high and higher low will keep changing. So if you mark it out like that, you can actually state that red color is 15 minutes, 1 hour is what color, can move accordingly. Okay, I'll just screenshot this down. I'll send it to the chat. Okay, example of higher high, higher low on multiple time frames. Okay, I'll send a combined chart. Let's give me a moment. Okay, got it. Okay, I will send this image. Apologize for that. Okay. It's an example of combining either invalidation, break-even, and partial profits. This is the right image that I have just sent. Okay, just to confirm, yeah, right image. Please save it down. It's very important. Okay. So, any more questions, feel free to let me know before I end this webinar. Any more questions? Let me know. So yeah, I'll give you guys another minute or so. So tonight we actually have the Canadian GDP news, 11 p.m. the consumer confidence. So yeah, stay safe trading tonight. Tomorrow, do we have any? Okay, Aussie CPI in the morning, 8:30 a.m. my time. All right. If there are no further questions, I would like to thank you guys for joining me today on another IC Markets exclusive webinar. So thank you, AJ. Thank you, Benjamin. Thank you, best friend. Thank you, Bob. Thank you, Cresswell. Thank you, Darren. Thank you, Desiree. Thank you, Doug. Thank you, Gerhard. Thank you, Judex, Jack, Zola. Thank you, Matthew Hope. Thank you, Michael Becker. Thank you, Neil Eastway. Thank you, Nguyen. Thank you, Noor Ahmed. Thank you, Oliver. Thank you, Promise. Thank you, Robert Zolik. Thank you, Robin. Thank you, Rodrigo. Thank you, Simon Coupland. Thank you, Sumit. And thank you, Ted Choi. Hey, no problem at all. Thank you so much, you guys, and have a good day. Really appreciate you guys. Stay safe trading. I'll see you guys in the VIP trading room. Okay, bye guys. Take care. Hey, no problem at all. Cheers to you guys too. I appreciate the kind words. Bye bye.